Robert from Toronto asks, recently, Barclays reported that the Fed has purchased 64% of all gross 8 to 10-year T-bonds and 91% of all 20 to 30-year T-bonds issued since Operation Twist began. That's disturbing news, but that wasn't widely reported. What signs do we look for as to when to short the 10-year T-bond?
Well, it's hard to make a call on when exactly is the right time to short T-bonds. I've kind of been short personally in a small way for a while, so it's hard to pick the top here in interest rates or the bottom in bond prices. Certainly, the past week is convincing evidence that maybe a top is in, but I say maybe, I can't say definitely, because we've seen this kind of action before. But we had a very big backup in interest rates during that week. Interestingly enough, mortgage rates barely moved, which shows me, I think, the Federal Reserve was buying mortgages more aggressively than it was buying treasuries, or there is more pressure on the treasury market at the moment. But I think if the Fed is going to try to keep interest rates artificially low, and it has to buy mortgages and treasuries to do so, it's going to have to print a tremendous amount of money to try to prevent rates from rising, which of course is bearish for the dollar, it's bullish for inflation and gold, and ultimately it's counterproductive, because the more inflation they create to prop up the bond market, the less attractive the bond market becomes due to the higher inflation that the Fed creates to prop it up. So is the Fed out of bullets here? Is the bond market about to roll over despite the Fed's attempts to prop it up? It's hard to say, but I wouldn't want to be long bonds. I wouldn't want to own bonds. I think the bottom is going to drop out. I do think it's the last bubble that's going to burst. That's why I think the Fed, when they did the stress tests, didn't look at falling bond prices, only stock and real estate prices. I think that's where the most risk is to the system. So if I had to have a position, I would be cautiously short the bond market if you're a speculator. But be prepared in case there's another false rally. They've kept this thing propped up a long time, but when this bond bubble breaks, I think it's going to break hard. And as far as people who might own bonds, I don't think there's any way to make money in bonds. I think there's only two ways to lose money: default or inflation. The Fed's going to pick the poison. The bondholders are going to have to swallow it, regardless of which poison they pick.